Hi folks, Lee Gettess here with the Market Sense for the week of January 31st, 2017. The charts we're going to look at are provided to us by Gettess and their Trade Navigator software. And looking at a weekly bond market, before I talk about the markets, let me say this. This particular week, they're all tough, but this particular week, we have 3 days worth of employment reports starting Wednesday, and that includes the monthly employment report on Friday. Plus, we have the FOMC meeting statement Wednesday and then the Bank of England discussion of interest rates on Thursday. Consequently, the markets have done nothing the first couple days of the week. They're just sort of biding time, and we're waiting to see what happens at the end of the week. So it's going to be awfully tough to have a real strong opinion on anything here, but we'll do the best we can. Looking at the bond market here, they closed very near support last week, and they're kind of sort of maybe holding it this week. That's the lower moving average there is in the 150 area, and they've dipped below it a couple of times, but they look like they're trying to hold it. The first possible resistance is 151.16. They have not been to that, but they also certainly haven't broken 150 and headed down to 148.24 either. I suppose both of those things are possible. I actually think it's possible that they go all the way up to the mid 153 area, 53.14 to 16 up in this area. And even higher. They could take out these highs, and then we've got a little ABC going higher. But it's just so hard to figure out how they're going to react. And of course, I guess we have to be concerned about if our president fires anybody in the middle of the night again. But, Fed statements, interest rates, employment report, good luck figuring out what they're going to do here. But those are the areas that we're looking at. And stocks are sort of in a similar situation. You can see it's just a tiny little bar compared to last week, just like in the bond market. I kind of thought if they were really strong, they might hold the 28.82 or 22.82 as support up here. Well, instead, you can see there was a gap down on the week, and they were basically below it immediately Monday morning. So that meant the 22.69 area here, the middle moving average, could possibly be support. It kind of is, but it's kind of sloppy. They've been a ways through it, but they keep kind of moving back up to close above it. If they do decide to break, we've got the 2050 or 2250 area. And if they break that, I'm not even sure these old swing lows will hold. I think they'll go below 2225 and down to the mid-Keltner here. But after last week, you kind of expected they'd continue up. We've got 23.910 up here as the next target for the upside, and I kind of thought they'd at least try that, even if they were going to fail. So obviously it's a very skittish week here, and again, interest rate stuff with both the Fed and the Bank of England, and then the monthly employment report. Man, they could move 3 different ways before the week's out. So, gosh, good luck. That's about all I got to say with this. So, sorry I can't find anything more definitive to deal with. I hope you can find something profitable to do yourself.